Good afternoon, everyone. A very warm welcome to today's webinar on recommendation of 53rd and 54th GST Council meetings. I am Ravindra Joshi, Additional Director, DGTS, DZU, and I'll be the moderator for today's session. We are honored to have distinguished panelists and esteemed guests with us today. This webinar promises to be a valuable session as we explore into the significant decisions made during the recent GST Council meetings. To start off, I would like to extend a very warm welcome to Shri Amish Kumar Gupta sir, Additional Director General of DGTS, Delhi and Kolkata Zonal Units. Sir has been a guiding force in all our efforts to enhance taxpayer services and has continuously provided leadership in all our various webinars. Sir's extensive experience and deep understanding of the complexities of GST have been sharpened over the years, during which Sir has rendered invaluable services in almost all the areas of department, such as excise, service tax, customs. We are privileged to have an opportunity to gain insights from his vast experience, knowledge. Now I invite Sir to deliver the welcome address. Sir, over to you.
Thank you, Ravinder. Thank you, everybody, and all the delegates, all our distinguished guests in this webinar, which have organized. As we all know that DGTS has been the vanguard of extending the knowledge to the taxpayer, the different areas of customs, GST, and other areas of the department. First of all, I welcome our distinguished guest today, Shri Jagati Sen Negi, Chief Commissioner, Chandigarh Zone. Sir is a really experienced officer of the department and has always been interested in taxpayers' welfare. Sir was the first officer under which I joined the department. So in a way, he has been the first mentor for me also in the department. So I joined under him in Ahmedabad, I remember. So after a long time, sir, welcome again, sir, to this webinar. I also welcome Shri Ajmer Bisla. He has been always, kind enough to, at a short notice, to partner with us in organizing webinars. Mr. Bisla is a champion of, trade issues and has been a long-standing partner for us in different webinars. After a long time, I think 6 months again, we have contacted him and he's gracefully agreed. So thank you, Mr. Bisla, for joining. I also see a young and very knowledgeable CA in front of me. I've been first time interacted with him. I'm going to interact with him in this webinar. Shri Shiva Goyal, we have heard about him that he's a faculty at NASA in Jaipur and has been his lectures are well received there and is well known in that area of the department. Coming to the DGTS again, this webinar has been jointly organized by Northern Zonal Unit and Eastern Zonal Unit. So in a way, this webinar is going to be half of the India we are covering. So this particular topic actually has been, this webinar has been organized with the initiative of a member GST, Shashank Priya. He was of the opinion that, time and again, these GST Council recommendations come and a lot of that information disseminated to the newspapers and the different media. But to the real receiver of this, information, the trade and SSCs, there needs to be a little closer interaction. So keeping that in mind, he has asked, specifically asked for this, although we have been organizing on different issues, he specifically asked us to do this for the GST Council recommendations. By the time we organized this webinar, we have two of them had been conducted, 53rd and 54th. So we have tried to combine both these. Mr. Shiva has prepared a very nice presentation I have seen. Coming to the topic is obviously very relevant to the GST side of the taxpayers. And we find that a lot of different trade-friendly actions have been taken in these and approved in these council recommendations. Like GSTR 1A has been reduced for amendments. That's a very important thing. It needs to be noted by the taxpayer. There have been changes in the pre-deposit. There have been changes in there have been section 11A has been introduced, just like in the central excise era time. We used to have. I was in the board at that time, and I remember that when there was some peculiar some state was practicing something, and because of that, some issue had arisen. So we used to iron out those differences, those issues through issue of notifications. So that has been now introduced in GST. A very good action taken. Also, additional IGST refund due to upward price revision has been introduced. Non-authorized representatives can appear for summons. So, a lot of such state-friendly measures have been introduced. Other tax-related changes are also there, which obviously Mr. Shiva will cover. But just setting the tone that this particular these two GST councils have really come out with different different act changes which will help out the taxpayer. So with these words, I'd like to start this. I'll ask Ravinder to take over. Thank you.
Thank you so much, sir, for your address. I think your words have set a strong foundation for today's discussion. Now, it's our great privilege to share that today we have with us Shri J.S. Negi, sir, Chief Commissioner of Central GST, Chandigarh Zone. Sir, it's an absolute honor for us to have you in this webinar. Sir is an IRS officer of 1991 batch and is currently serving as Chief Commissioner of Central GST, Chandigarh Zone. Sir has worked in various capacities in all the formations of the department, including Central Excise, Service Tax, Customs. Sir has also diverse experience of working in various formations of CBIC, which includes Custom House, National Customs Targeting Center, Mumbai, as Commissioner Customs Appeal, Commissioner Audit, and many more. Sir has also experience of working as departmental representative in SESTAT and also worked in directorates such as Directorate of Valuation, Mumbai. Sir, kindly share your insights on the topic and enlighten us. Sir.
Thank you, Ravinder, and thank you, Amish Kumar Gupta. I still remember you joined as a young officer in Ahmedabad, so those memories are there. So right now we are meeting for all those words. Colleagues and senior Director General Mr. Amish Kumar Gupta, Additional Director Ravinder Joshi, Mr. Ajmer Singh Bisla, Senior Advisor from Confederation of Indian Industry, our guest faculty, CA Shri Shiv Goyal, members from the tax consultancy, the participants, taxpayers, and other participants. General of Taxpayer Services, Delhi Unit and Kolkata Unit, jointly in association with Confederation of Indian Industries. I would like to express my heartfelt appreciation to the Director General of Taxpayer Services for their unwavering commitment to taxpayer outreach, education, and facilitation. Our senior leadership from the board have also been emphasizing the importance of actively communicating with the taxpayers, ensuring they are well informed about the trade-friendly measures, etc., and other the reforms that have taken place in GST Council meetings. So in that context, your efforts in organizing this timely webinar on the recommendations of the 53rd and 54th GST Council meetings are truly commendable. As we gather today, we stand at a critical juncture in the evolution of India's goods and services tax regime. The GST has been a game-changing reform, unifying our nation into a single market and streamlining the indirect tax structure. However, as As with any transformation, it requires continuous refinement and adaptation to meet the ever-changing needs of our economy and stakeholders. The 53rd and 54th GST Council meetings have addressed key challenges and opportunities, focusing on simplification, clarification, and trade facilitation. The recommendations span across goods and services with significant changes in tax rates, exemptions, and compliance procedures. These decisions reflect the collective wisdom and tireless efforts of the Council in striking a delicate balance between revenue objectives, ease of doing business, and societal welfare. From the reduction of GST rates on essential items like cancer drugs to the rationalization of rates on products like namkeens and saver items, the Council has demonstrated its commitment to ensuring that the tax burden is equitable and does not adversely impact the common man. Similarly, recommendations of exemptions like flying training courses and research and development services provide much needed relief to businesses, enabling them to make informed decisions and contribute to the economic growth. Moreover, the trade facilitation measures, such as the waiver of interest and penalties for past demands, simplified refund processes, and dispute resolution mechanisms, are a testament to the government's resolve in creating a more conducive and taxpayer-friendly environment. These initiatives will go a long way in boosting investor confidence, promoting ease of doing business, and unlocking the untapped potential of our economy. As we delve into the intricacies of these recommendations, I urge all stakeholders, taxpayers, professionals, and industry representatives to actively engage and seek clarifications and provide constructive feedback. Your insights and experiences are invaluable in shaping the future course of GST and ensuring its successful implementation. Let us work together in a spirit of collaboration and partnership to overcome the challenges, seize the opportunities, and build a more resilient and prosperous India. Once again, I commend the outstanding efforts of the Directorate General of Taxpayer Services and the leadership of in the CBIC in navigating these challenges, these challenging times, and working tirelessly towards a more robust, transparent, and taxpayer-centric GST regime. Let us collectively pledge to support this transformative journey and contribute to the realization of our shared vision of a self-reliant and economically vibrant India. Thank you all, and I wish you all a highly productive and enlightening webinar. Thank you. Jai Hind and Jai Bharat.
Thank you so much, sir, for sharing your invaluable insights with us. Thank you again, sir. Now, I would like to introduce Mr. Ajmer Singh Bisla, who is a Senior Advisor Indirect Taxes with CII. Mr. Bisla has more than 32 years of practical experience and exposure to tax administration. Presently, Mr. Bisla is a Senior Advisor to CII for indirect taxation and disseminates, collates, and deliberates on the issues and suggestions of industry on indirect taxes and GST for submitting this recommendation to government for consideration. He is also qualified by NASEN and Apex Training Institute of CBIC as accredited trainer for GST. Mr. Bisla also organizes interactive webinars sessions to keep members informed of the updates on indirect taxes. Welcome, Mr. Ajmer Singh Bisla. A few words from you, Mr. Bisla.
Thank you, sir. Distinguished Chief Commissioner CGST and Central Excise Chandigarh John Sri GS Negi, Additional Director General Taxpayer Services Sri Amish Kumar Gupta ji, Additional Director DGTS Sri Ravinder Joshi ji, and my friends Chartered Accountant Sri Deva Goyal ji, other officials of Delhi and Kolkata Zonal Units of DGTS CBIC, and esteemed participants. Directorate General of Taxpayer Services CBIC, through its interactive webinars, is doing a tremendous and most sought after services of hand-holding stakeholders by making them aware of the changes introduced from time to time in customs and GST, explaining and sharing the government's view on various provisions. Interactive sessions with CBIC officials gives an opportunity to the stakeholders to get the deeper knowledge on the topic and understand the nuances of the provisions. Industry and stakeholders also get immensely benefited through these interactions. They get deeper understanding, they get their queries resolved, and without routing through the consultants and the litigations, thereby they are saving time and money both. In the series of such interactions, today's webinar is on a very important and much awaited topic, that is the recent recommendations made by the GST Council in its 53rd and 54th meeting, which covers many important asks of the taxpayer, and important issues have been covered, which requires changes in law and issuance of clarifications, further suggestions shared by stakeholders from time to time through trade bodies like CII and other means, which have been deliberated and considered by the GST Council. So I would, as our worthy Chief Commissioner has also mentioned, I would also like to just brief on the few of the very important topics which the GST Council has taken up and I think resolved for ease of doing business. The foremost is waiver of interest and penalty of demand notices under Section 73 for the years 1718 to 1920, where the demand is paid by 31st of March 25. Now here I would like to put one more query to the distinguished officers, that whether this paid in full as per Shoka's notice or whether it will be paid on issue wise. So it is yet to be clarified. Now, second important aspect is input tax credit relief has been extended up to 30th November 21 as the new timeline for ITC on any invoice or debit note pertaining to years 1718 to 2021. Again, also whether this is a date of filing of return up to 30th November, that is delayed days only, or due to filing of return of November day by 20th of December. So this clarification is yet to be received. Then another important aspect has been covered for reduction in the government litigations and reducing the threshold limits for 20 lakhs for GSTAT, 1 crore for High Court and 2 crore for the Supreme Court. So it will help a lot to the taxpayers. The new invoice management system is proposed to be introduced initially on optional basis to streamline the flow of ITC in GSTR 2B, where inward invoices shall be required to be accepted, rejected, and to be kept pending. Introduction of new RCM ledger to capture the RCM liability and ITC thereof of the taxpayers. It is also a unique introduction, where input tax credit reclaim ledger, where taxpayer is given an opportunity to declare their opening balance for these ledger by 31st October is being provided. Now point here comes whether it is available for the retrospective period also, or it is applicable for the current financial year only. So again, a point of doubt here. Now the new functionality introduced in the form of GSTR 1A has been added, where the taxpayers can rectify their errors which were missed in the GSTR 1. Then relaxation in the form of conditions of input tax credit by insertion of subclause 5 and 6 of the section 16 is also a welcome step, which covers the belated filing of return by suppliers and for the period from the date of cancellation of registration till the date of revocation of cancellation of register. This was also a great pain point to the taxpayer where they could miss the admissible input tax credit. Earlier, there was no mechanism for claiming refund of additional IGST paid on account of upward revision in prices of the goods subsequent to their exports. Now this has been allowed and recommended by the GST Council. So it is a great relief for the taxpayers to get their refunds, due refunds, that too in the time. Further, the clarifications have been provided on valuation of supply of import of services by related person and also on the corporate guarantee where recipient is eligible to full input tax credit. So this is also a much sought after ambiguity for the taxpayers. Important recommendations during the 54th meeting of the GST Council has also covers many important points like reverse charge mechanism introduced on supply of metal scrap by unregistered person to a registered person. But here also imposing TDS of 2% on supply of metal scrap by registered person to in B2B supply appears to be a cumbersome process. Further, what tax rate rationalizations, uniform rate of 12% on cartons and boxes and reduction in GST rate on namkeen is also a very welcome step, including classification of automobile seats under Chapter 94 and streamlining the rate of the tax, which will also further reduce the ambiguity of different interpretations and reduce litigation. Accordingly, for ease of doing business, clarifications have been issued on PLC charges for construction services, renting of commercial property, putting under RCM charge from unregistered person to registered person, then ancillary or intermediate services like loading, unloading, packing, unpacking provided by GTA in the course of transportation of goods by rail to constitute a composite supply. Then rental charges against electricity meters, testing fees, etc., which are part of a composite supply for supply of electricity. And GST Council recommended for insertion of subsection 5 and 6 of section 16 retrospectively from 1st July 2017 will also resolve many issues. So clarification in respect of IGST refund on exports where benefit of concessional or exemption notification as specified under Rule 96 of Rule 10 was availed on the inputs, where IGST on such inputs are subsequently paid along with applicable interest. So these will also help in resolving many issues which were pending against the taxpayers. So with these words, I think today's session is very important for stakeholders to get the deeper understanding on the plethora of amendments covered to clear their doubts. My friend Mr. Shiv Goel will be covering all these topics in detail. So the participants can ask questions in their apprehensions and issues straightaway from the authority present today. Hope that everyone will get benefited with the presentation by the expert and officer. Thank you very much again, all the officers and DGTS for giving us an opportunity for this deliberation. Thank you very much, sir.
Thank you, Mr. Visla, for your views. Now for the presentation, I would like to introduce Mr. Shiva Goel, a distinguished speaker and a fellow chartered accountant. With over a decade of extensive experience, Shiva Goel has established a formidable reputation as a highly acclaimed speaker who has shared his insights in more than 100 sessions at esteemed forums, tax bar associations, and ICAI branches nationwide. Recently, he was nominated as a consultant to the GST Council Secretariat, a prestigious role that underscores his deep understanding of indirect taxation. Moreover, he has been invited by prestigious institutions such as Haryana GST Department and Nasen, where he enlightens senior officials on critical GST aspects. His exemplary contribution have been recognized by with the Rashtriya Gaurav Award presented by former Lok Sabha Speaker Mrs. Meera Kumar and Young Entrepreneur Award 2022 bestowed by Indian Achievers Forum. A prolific author Shiva Goyal has co-authored a handbook on GST impact on real estate sector. Welcome, Mr. Goyal. You can please begin with your presentation.
Thank you so much, Ravinder ji. Honorable Chief Commissioner Sir, Shri J.S. Negi ji, Shri Amish Kumar Gupta ji, Additional Director General DGTS CBIC, Shri Ravinder Joshi ji, Additional Director DGTS CBIC, and our trade partner Shri Ajmer Bisla ji, Senior Advisor Indirect Taxation CII, and all the esteemed participants present here. Today we are here to discuss about the recommendations of the 53rd and 54th GST Council meetings, and I would be giving more weightage to the recently concluded 54th GST Council meeting, but would take certain insights initially for first 15 minutes on the 53rd GST Council meeting outcomes, and then we will proceed with the 54th GST Council meeting outcomes that have come long way. So basically, I would like to present my presentation and would start to right away with the council recommendations by not taking much time. I think my presentation is visible to all. May I get a confirmation? Yes.
Yeah, it is visible.
Yes, yes.
Thank you so much for the confirmation. So basically, the 53rd and 54th GST Council meeting, if I can correct it, then it is purely as the measures for the facilitation of trade. I think in any council meeting, so many trade facilitation measures have not been taken that if we compare it to 53rd and 54th GST Council meetings. So what are the key amendments and key introductory outcomes of the 53rd GST Council meeting? Let us see one by one and let us understand the context of it, and then we will proceed further with one by one amendment or the outcome that has come a long way. So we start with the introduction of the form GSTR 1A, which was recently notified by the notification number 12/2024 dated 10 July 24, which facilitates amendment in the GSTR 1 or the missed or revised details. Actually, it was the long plea from the trade side, and a lot of representations were received from the various associations in the industry that revision facility is not there in the GST. As we all know, there cannot be any revised return for GST 1 or 3B. So the taxpayers had moved to various courts and litigated this issue that any clerical error can be committed by any trade or taxpayer. So why could not there be a chance for the revision? Although we believe that GST 1 gives you a chance in the another month for the revision in the invoices, but there was a very strong plea from the trade side that we should be given facility to amend the detail if we have given any wrong detail in the file GST 1. So this is a welcome step. GST 1A functionality has been introduced, and it allows you to modify your GST 1 file details. Please note that it doesn't allow you to change the recipient GSTN. You can change the invoice number, you can change the taxable value or any other amount, but it doesn't allow you to, to change the recipient GSTN. So you have to be very conscious while filing the GST1 so that recipient GSTN is well corrected, and then you can probably file GST1. Another thing that you must know is GST1A is an optional facility or mandatory facility. Please keep the session very interactive. Interact with me. You will have lot of insights which are not there in the notification, the practical things that may come up by the tax professionals. Sir, is this mandatory filing GST1A unlike this GST1? So I would say GST1A is not mandatory, but it's an optional facility. If you have filed all the details correctly in GST1, then you don't need to do 1A. It is only, it is basically only applicable when basically you are just have put up any wrong details and you are now want to change any detail or give any modifications. Now the another very important amendment that has come into play is the introduction of the section 74A. I would just like to stop my screen. My video has paused, so I would like to start my camera once more. I think it is visible now. Yeah. So 74A was introduced to uniformly, propose the time limit for the show cause notice and the adjudications for 73 and 74. Actually, what was happening is, as you all know, there was a previous time limit of 33 months under section 73 for the issuance of the show cause notices, and under 74 there was 54 months was defined as the time limit to issue show cause notices. So what was happening is, because under 73 lot of cases were there and there was a less time limit of 33 months because of the initial years. So there was a plea from the department side due to the shortage of time. Department officers started to issue notices under 74. Maybe the cases of 73, but department officers were issuing notices also on the 74. So what was happening is, because they did not want to miss out the revenue leakage, so it was happening like this. But of course, the trade was going into litigations to courts that there is no evidence as to fake invoices or willful default. So all those cases was going into this particularly the 73 basically, not 74. So now the council has taken this long way stand to merge both the sections and introduce a new section 74A where a time limit of 42 months have been made applicable for issuing show cause that notice that is applicable from financial year 24-25 onwards. So up to 23-24 section 73 and 74 will prevail, but from current financial year 24-25 onwards 74A will be applicable. Sir, what is the time limit to issue order? Time limit to issue order is 54 months. Previously in section 73 it was 36 months and in 74 it was 60 months, but now in 74A it is 54 months. So you can see previously in 73 show cause notice has to be issued in 33 months and order has to be passed within next 3 months. So officer used to get very less time in passing the order. So various errors were done. Show cause notice reply was not well considered by the officer and lot of other things happened. So now you see 42 months and then order passing date is 54 months. So officer get a time of 12 months, 1 year to adjudicate that show cause notice and pass an appropriate order by considering the reply, by giving personal hearing. And so you see what council is doing is to give a chance to the officers also to understand their pain points and bring out the amendments and the outcomes from the council meetings that could provide relief towards the principle of reducing litigation. So all the amendments you would see is derived from the major principles, economic principles towards simplicity, towards reducing litigation, and so on and so forth. Another important amendment is the quantum of the pre-deposit for the appeals. As you all know, there has been a reduction in the pre-deposit. There was a plea from the trade side that we have to pay 10% to the appeals, and then there was a 20% additional pre-deposit was required previously for filing appeal to the tribunal GSTAT. But now, as a 53rd GST Council recommendation, 10% has been kept at the commissioner appeal level, and then additional 10% has been kept at the GSTAT level. So total of 20% pre-deposit would be required as a pre-deposit for filing appeals at the respective forums. Appeals 10% and appellate tribunal 10%. And maximum capping has also been reduced to maximum of 40 crores for both the appeals and appellate tribunal level. Then the next welcome step is the section 11 introduction. If you remember from the erstwhile regime, then 11C of the central excise regime was the one of the section that could acknowledge the acceptance of prevalent general trade practices that can come out of confusions in entries, that can come out of the a long practice that industry is following due to ambiguity in any of the entries in the GST laws or excise laws. And section 28 was in the Customs Act, which recognizes this prevailing trade practice. So similar section was also required to be introduced in GST also. So thanks to 53rd GST Council meeting, that provision has been outcome has come, recommendation has been made, but still it is yet to be notified. And in 54th GST Council meeting, it has been ratified that this section will entertain only those cases which actually arise out of ambiguity. It should not be so that where the entries are much clear and trade is coming with the representation to consider his case or into 11A. So council has clarified that these cases will not be considered where the entries are very clear. Only rare cases which actually are the need of the hour will be considered in the section 11A. So it is going to give much relief to the trade in terms of notices issued by the DGTI and regularizing the past period cases on as is where is basis. Then a lot of circulars have been issued in 53rd GST Council meeting. I would be I would be giving attention to the 53rd GST Council meeting. Not I can explain every circular because it will take much time. I would be majorly focusing on the 54th GST Council meeting. So I would be just giving you a point for thought or one-liner discussion on the circulars of the 53rd GST Council meeting. Then we'll have a detailed discussion for the 54th GST Council recommendations. So a lot of circulars have issued. Circular number 225, which provides clarity on the taxability and valuation of the services of providing corporate guarantee between related persons, which said that rule 28A will be applicable post this October 23. And previous to that also, GST was applicable between this corporate guarantees, and other issues are also being discussed in the circular itself. Then circular 209 talks of the very important issue by mentioning the provisions of 10(1) clause C of the IGST Act relating to place of supply, which categorically states that in case of e-commerce operators, which will be the place of supply when the billing address is different from the address at which the goods have to be dispatched. So it was clarified that the address at which the goods will be dispatched should be considered as the place of supply for the purposes of this particular section, not the billing address. So this was clarified by circular number 209. Then there were clarification on the warranty replacements and extended warranty by way of circular 216, that no ITC is required for this goods replaced under warranty, whereas extended warranty is a separate supply. It's a distinct supply basically. In case you want to extend the warranty by another 1 year, so it is not a part of the original contract. It is a kind of separate supply that needs to be treated. Then taxability of ESOPs related transactions was clarified by circular number 213, which stated that no GST on purchasal of security between foreign holding and Indian subsidiary. Actually, the DGGI or the officers were considering this transaction as considering this as a supply, but it was further clarified that it will not be mere deeming fiction. It cannot be treated as a supply. ESOP related transactions are well in the nature of shares or securities, and therefore GST will not be applicable. But in case there is a kind of additional fees charged, which of course is a levy, and supply would be attracted, and thus circular clarified that way. Another circular 211 clarified the time limit to the ITC under RCM, and it very much stated that in case of inward supplies received from the unregistered persons, what would be the time limit for ITC. So what was happening is under RCM the payment was being considered and ITC was being availed, but sometimes officers were litigating that the time limit of the date of self invoice generation should not be considered as the time from which this time limit of 16 for to avail the ITC to be considered. So it was clarified that that whenever self invoice would be generated, that day would be counted to avail the ITC for the time limits of section 16.4. Then section another circular was issued 226, which is a much welcome circular for the refund of additional IGST due to upward revisions in the export prices. So what was happening is, once the exporter is exporting, so he's claiming if he is doing with payment, then it is an automated process. If it is without payment under LUT, then we have to of course file a refund application under RFD 01 to claim the GST refunds. Now what happens when the refund application was being applied and refund was being granted, then sometimes what happens, there are certain debit notes which are being raised. So might be possible that rates have increased. So so exporter has increased the rate substantially, or there might be any reason, business reasons, that there has been upward revision in the export prices. Then what was happening is the exporters were applying for the refund and in any other category, because for that particular period refund application cannot be applied again. If you see that if we have applied for a period, let's say 23-24, we have moved an application for the refund in case of exports, then you cannot apply it again. So what problem was coming in case of that upward revisions? Let's say after 6 months there has been a revision, so the exporter was not getting refund in any other category due to lack of clarity. So now it has been clarified that, so whenever there has been a revision in all those cases, 2 years will be counted from that export upward revision date, and you have to just pay the if you are paying it with payment, then you have to pay the interest also in the customs. Even if you are paying without payment, then you have to pay that interest part of the custom duty and GST in case of with payment. So in this case, the conditions are applicable. The circular is well defining that you can claim the refund in any other category. Then calculation of interest. If you have a electronic cash ledger balance, then amount available in cash ledger should not be included for the will not be included for the interest calculation. So it is another very much welcome move, and it is another a move towards trade facilitation and giving relief to the trade, that if you have supposingly you have a bank balance in your passbook, you have a bank balance available in your bank account, then in the similar way, if you have balance in the electronic cash treasure, interest will not be calculated on that particular balance. Then interest calculation on wrongly availed ITC should be considered together as a total of IGST, CGST and SGST. What was happening is officers were counting it as a separate IGST, CGST and SGST for the purpose of calculation of interest in case the demands have risen. But clarification came that you have to see it in a composite manner when if the interest if the ITC is lying down below the total of the IGST, CGST and SGST, then only you have to charge the interest. Otherwise, there is no need in case the balance is not falling the amount of the total ITC clubbed together, not separate headwise. Then time limit for the realization of the consideration for the export of services. Another relief came that extended to 15 days after 1 year or period allowed under FEMA. That was the change that was brought into place by this council meeting. See, previously, sometimes what was happening is RBI was extending that time period. Let's say in case of Corona, it was to 15 months basically. So in case these things, the time period is being extended. So what was happening is if RBI is increasing the time period, then GST should also consider that time period to be extended. So that amendment has been brought in the rule 96A(1)(b) of the CGST rules. That was a kind of, that will be in line with the FEMA Act and FEMA rules per se. So this was the much required change, I would say, that was required by the industry. Now in GST also, you can well see that this change is a welcome change, and now it is in line with the FEMA rules. Then another change that has come is the exemption on the specified accommodation services up to 20,000 per month if it is for a continuous period of 90 days. So what was happening is PG services had a dilemma that whether they would be covered under residential accommodation exemption, whether they were lying that entry, or it is a kind of business where the there is no residential accommodation akin to the dharamshalas and all that stuff. So a much needed clarity was required. Even Madras High Court has also given its judgment on this, that this is as good as the residential accommodation services. So now a limit has been prescribed. It is a much relief for the working professional as well as students that generally, in Delhi also or all over area, I think the amount is very nominal, 20,000, 15,000, 10,000 per month is being charged by the PGs or the landlords. So in case the 20,000 it is per month and 90 days continuously a student or working professional is residing into that, then you don't need to pay any GST on that. So it is an exemption entry that has been inserted by the virtue of 53rd GST Council recommendation, and again it's a welcome move, giving relief to the trade. Then threshold limit has also been reduced in case of B2C from 2.5 lakh to 1 lakh. Then GST 4 filing date has been increased, extended from 30th April to 30th June. It is also giving relief, extension by another 2 months. Now you don't need to worry that you need to file the GST file of composition dealers in a month only. You have sufficient 3 months after the close of financial year. And then GST 9 again, the exemption has been remain intact for up to 2 crores. It's an optional facility. GST 9 and 9C 5 crores. Same benefits have been extended in the 53rd GST Council meeting. Then under section 70, subsection 1A has been introduced, where the authorized representatives have been allowed to be appeared on behalf of the summoned person. Actually, CEOs and directors were questioned by the DGTS authority that they need to be presented in person only to whom it has been summoned. So sometimes they want that authorized representatives to be sent. So officers were not, considering those authorized representatives as a compliance to the summons. So now when this subsection have been amended, then it is a welcome move and relief to the trade that now authorized representatives will be allowed to be summoned as per the law. Then empowering government to notify types of cases heard by the principal bench of appellate tribunal. So what was happening is 3 months time limit was being counted from the date of appellate tribunal or the assuming of charge of the of president appointment in the principal bench. That has already been done. But it was under trade was thinking that all the tax professionals were thinking that 3 months time limit has increased, has been started, but they have given recommendation that time limit will be notified once the GSTAT is operational, and date will be notified, and 3 months time limit will be counted from that date to be notified by the CBIC on the, of course, on the recommendations of the GST Council. So now you don't need to worry. Your time is still pending for your appeals to be filed before GSTAT, and let us wait for the that infrastructure to be set up. As you all know that the states are setting up their infra, the real estate infra, where the bench is to be set up, and we can soon expect that in financial year, probably in 24-25 itself, the GSTAT should be operational. Let us see further what happens, but now the things are moving very in a very fast way. So we can expect that a very long pending demand of the trade is going to be over, and relief is going to become. Then TCS rate limit has been reduced from 1% to 0.5% to ease the working capital burdens, and mechanism for the adjustment of the demands is a welcome step. So what was happening is DRC 03 demand has already paid against the electronic liability ledger against the demand raised. That DRC 03 is separate and demand is showing as full. There was no adjustment made between the two. So there are two options previously. Actually, you have to pay any demand in the electronically liability ledger, payment towards the demand ledger. But out of lack of knowledge, what tax professionals have done or trade has done is that they have paid DRC 03 and they have not paid it through the payment towards demand, and now demand is standing 100%, though they have paid through it DRC 03. Now, of DRC 03A, another relief has been provided, and this was the relief that was much required. The relief is this, that through introduction of DRC 03A, you can well link up the DRC 03 and order number through which you want to set up that demand. So that functionality is a very welcome step, and probably the trade and tax professionals can use it to reduce your tax liabilities that are there in the electronically liability ledger. And further, you can pay it further 10% more till the time GSTAT is operational. So automatically stay will also be there when you pay 20% and demand is reduced in that way. Then biometric based Aadhaar authentication to be was tested in Gujarat, and it was successful to curb out the fake invoicing. Now it is to be rolled out pan India. Monetary limits introduction for the departmental appeals by way of circular number 207 is another welcome step, where the 20 lakhs limit has been provided for the tribunal, 1 crore for the high courts, and 2 crore for the honorable apex court. But this limit is not applicable where there is a question of law, there is a question of refund, there is a question of valuation. Certain exclusions are also given in the circular itself, that these limits will not be applicable in those cases. And where in the interest of the board or CBIC board thinks that this should be litigated in the interest of the revenue, then these limits will not be applicable. For knowledge purpose, I must tell you, in the customs, the limit is 50 lakhs for the tribunal, and same 1 crore for the High Court and 2 crore for the Supreme Court. By introducing these limits in the GST also, it's a welcome step, and it well coordinates with the principle of reducing litigation, and department wants that the cases should not be litigated more which are below this threshold limit. Then clarification came through the circular number 219, where it was clarified that the ITC would not be restricted for the ducts and manholes used in the network of optical fiber cables in terms of section 17.5 of the CGST Act. Now, I think we have spent pretty well on the 53rd GST Council meeting recommendations, and I have well given a brief and the reason as to why that amendment was brought into place, what was the issue, and why the amendments was needed. Now we move to the 54th GST Council meeting, which was recently held on 9 September 2024. In this meeting also, lot of industry specific recommendations and clarifications have come, which have given relief to the trade, to the taxpayers, and this is like we're starting with the highlights, and then we will discuss each of the council meeting recommendation one by one. So GTS services, in case this is GTS providing any other facilities apart, in addition to the transportation services, such as loading, packing, then it should be considered as a composite supply. But in case it is invoiced separately, then it will not be a composite supply. So I am just touching upon the highlights. Let me give you a clarification that I will discuss all these things in details in later slides. So I'm just giving you highlights that there has been a clarification of logistics. There has been a discussion on the PLC charges that is before CCOC. If builder is giving it services as a part of construction services, then it should also be a part of composite supply. Then in the later slides, we will see what was the reason and how this is being recommended. Then electricity services, there has been a recommendation on that, exemption on the ancillary services. Then advertising services circular has also come. We'll discuss in much detail. Data hosting services is another circular has come, and you see now the council has given its press release on 9th of September, and probably after 4 or 5 days the circulars have come. So you can see the expedition of the CBIC to issue the circular in a very fast way. Now it looks like that department is also working on a very fast pace, that clarification should come and trade should be provided relief, which is much awaited through, of course, the circulars and the notifications, which will of course have the low impact. So data hosting services circular has also come. Then rail mounted package units, there was a press release that was there that RMP would be classified under HSN 8415 and GST rate of 28% would be applicable on that. Then film industry has been given a relief on past cases. We'll discuss in much detail. Another my favorite amendment has come in the GST refunds by exclusion and omission of Rule 9610, 894A, 894B, which were previously introduced, where the exporters were availing benefit of notification 78 and 79 of the Customs Act, where you get advance authorization. You were using the EPCG license, advance authorization schemes when you are importing, and you are availing benefit of custom duty exemption and sometimes of GST also. So these rules were introduced so that double claim should not be there for the exporters. But I will discuss in detail that these rules were misinterpreted by the by the officers, and perhaps in the 54th GST Council meeting, the rules have been omitted to give to expedite the and to give relief to the GST to the exporters for expediting GST refunds in terms of exports, and to get the refunds now much more easily, because Rule 89 provides formula for the exports. Rule 89.4 provides export GST refund formula, whereas 4A, 4B started with certain lines. We will discuss in detail. Then circular have come on the ITC on demo vehicles which are used for further supply and sold after a specified period qualify for ITC. This was also very much relief that was being asked from the dealers of the various car companies, four-wheeler companies. Now the circular has also come. We'll discuss in the later slides. Certain goods revision have come. You can see the namkeens and extruded savory products GST rate has been reduced from 18% to 12%. Cancer drugs, of course, the rate was previously 12%. It was being represented by the specific, Ministry of Health Affairs, and there was a need for the revision in rate, and rate has been recommended to be revised at 5%. Car seats, again HSN 9401, it has increased from 18% to 28%. As we all know that on the two-wheelers it was already 28%, but now on the car seats, to maintain parity between the two-wheelers and the four-wheelers, the rate has been increased from 18% to 28%. Then transportation of the passengers by helicopters on seat sharing basis has been reduced from 18 to 5%. There has been certain exemptions that have come into play. Flight training courses, there has been exemption. R&D affiliation services provided by the educational boards to the government schools, then importer services by the branch offices. We'll see in the exemption slide that providing this exemptions, council has shown that they are standing with the trade to give lot of exemptions, lot of rate reductions for the facilitation of the trade, relief for giving the much awaited relief to the taxpayers. Now again I would discuss the much awaited relief for the trade, that was introduction of the RCM and the TDS provisions on the metal scrap. What was the pain point here? I would just discuss it in this slide itself, and I would start my explanation from this slide onwards for all the provisions that have been mentioned in the 54th GST Council recommendations. Now you see what was the need for this RCM provision and the TDS provisions that has come a long way in the metal scrap. Bogus invoicing or the fake invoicing was happening so much in this scrap sector, because the origination of the scrap comes from the kabadiwalas, who are generally rag pickers, or kabadiwalas who are generally unregistered. So what was happening is, let's say dealer 1, dealer 2, dealer 3, dealer 4, there was a chain that was there, and aggregation of that scrap was happening. Now what was happening is, when the material was moving from trade dealer 1, 2, 3, 4, and finally, let's say for taking an example with the Tata Steels is purchasing from dealer 4, and it is paying GST. It is paying GST to the dealer 4, and now Tata Steel is getting lot of notices from the DGTS that ITC that you have availed was the fake bogus dealer invoice. So now big companies, Jindal Steels, Tata Steels, were very they were very harassed by the, assessments by the departmental officers. They are saying we are paying GST and out of there are no mistakes. Their pain point was out of their no mistakes, they are still getting into this trap of bogus invoicing, and they have to reverse the ITC. There is, the burden to prove was on Tata to prove that the dealer 4 and subsequent chain have not availed that fake ITC or the bogus ITC. So now they ask for the RCM provisions. Why don't you implement RCM provisions on the scrap? So RCM provisions were discussed in 45th and 47th GST Council meetings, but RCM could not be, fitment committee was not, was not having any consensus on bringing due to this RCM provisions, this particular section 17 to 17.3 virtue, the ITC has to be reversed. As you all know that the section 17.2 and 17.3 assumes that RCM supply has to be treated in par with the exempt supply, and due to which ITC has to be reversed. So what was happening is, due to RCM supply in the outward supply, then ITC was being reversed at each stage, and there was a 18% cost to the dealer at each stage. So then there was a cost at each stage, so that RCM could not be implemented. Now, what was the way out then when RCM was not being implemented in B2B registered dealers? Then TDS provisions made applicable by this GST Council, and due to implementation of the TDS, now dealers have to deposit 2% in the cash ledger, and supposingly dealer 1 is depositing 2%, then another dealer 2, dealer 3, dealer 4, then 8% will be deposited with the government kitty in terms of cash ledger. And now with the introduction of this TDS provision, you will see that drastically the bogus invoicing racket will come down to a greater extent. So I through this webinar even say that it is being implemented on the metal scrap only, but it should be implemented on plastic scrap, and I would say other non-metal scraps also, where the fake invoicing is already in a greater sizes, because scrap does not come in isolation on only metal scrap, it comes together, metal as well as non-metal. So now the bogus dealers may take this may misuse this provision also on the TDS provision, that and may start doing fake invoicing by the name of non-metal scrap. So I think in the next council meeting that non-metal scrap should also be included to 100% safeguard and to 100% stop this particularly the racket that is being conducted by this scrap dealers. And I really think that by introduction of the TDS provision and RCM provision only from the unregistered to registered persons, together these two provisions is going to solve the problem of the fake invoicing to a larger extent, and this is a much welcome move and the recommendation made by the 54th GST Council meeting. So I think the intent of bringing this TDS and RCM provisions is well clear to all the participants. I would like to just bring clarity to one of the provision. In case unregistered person is giving supply to the registered person below the threshold, then of course RCM has to be paid by the registered person, even if the registered person is below the limit of threshold. But in case the person crosses the threshold, unregistered person is crossing the threshold, then of course the person would be registered, and he would come into the this registered person, then TDS provisions would be applicable. Then renting of commercial property by unregistered to registered person has also been come into place by the tax by the has come into play under RCM. This is in line with the residential property, because in residential property this renting was under RCM, but in commercial property this was not under RCM. So this provision has come into play to have the level playing field of the renting of commercial property by unregistered to registered person, to bring into the tap of RCM in line with the residential accommodation. Then GUM on life insurance and health insurance has been constituted on 15th of this September, and they are yet to meet, and they have to submit a report by the end of October 24, and in the next GST Council meeting, that is tentatively to happen in November itself, I think this things will be taken up in the next council meeting. Then we are awaiting the provisions of section 128A that is to be effective from 1 November 2024, much awaited provision where the interest and the penalty waiver is expected. And in the 54th GST Council meeting, procedures have been set down, and it is a much awaited provision. Trade is waiting for the it to be notified so that they can avail the benefit of that. In a similar way, 16.5 and 16.6 will be much useful sections which are still to come, still to be notified, so as to avail the time limits benefit till 30th November 2021 for the initial 4 years, starting from the 17, 18, 18, 19, 19, 20 and 2021. Now we will start with the exemptions, and I will be I have given a very I have given overall view on all the exemptions and GST Council major recommendations. Now I will go much in a faster way, so that in the end of the webinar I may come for the interaction with the queries that trade and the participants may have. So R&D services exemption has been recommended by the council on the R&D activities. In order to promote this R&D activity, council has recommended to provide exemption on the R&D services in line with the research associations that are there. In the Income Tax Act, section 35 of the Income Tax Act, the weightage deduction is already there. So GST exemption has also come into play. Now affiliation services to the government schools by the board have been recommended by the council to reduce the cost of the education sector. GST Council has recommended to exempt affiliation services provided by the state central bodies to the government schools. Please note that it is to the government schools, but it is, if this is being provided to the constituent colleges, then again the 18% GST will be applicable with no exemption for such services provided to the educational institution. It is specifically to the government schools. Then import of service by the branch office of the foreign airline company will discuss in the circular itself. Application fees for the electricity connection and the rental charges. You see, it's a much welcome exemption for the ancillary services that are related with the transmission and distribution utility, such as rental charges, electricity connection, meter charges, testing fees. कई बार meter shift करना पड़ता है, so charges are being charged for the shifting of meters. So all these things were taxable earlier, whereas the main composite supply was exempted. Distribution of electricity by transmission and distribution of utilities. Now all these ancillary services have also been exempted by this GST Council recommendation, 54th Council recommendation, and it is also recommended that for past periods, if any such disputes have been arisen on this ancillary services, that should be regularized on as-is where basis. It's a big relief. Then exemptions to the flight training courses conducted by DGCA. It is in line with the maritime exemption. Courses were also already exempted on those lines. So DGCA approved flight training courses. FTA, if they are providing any courses that are approved by the DGCA, now they are exempted, and it has exemption will be very, very welcome step for settle all the disputes, and non-levy of the GST will be there in all these cases. RCM I have already talked of. Commercial property, renting of the commercial property, if unregistered or registered is there, then there will be a RCM in line with the residential property. Metal scrap, we have discussed in much detail that if there is an unregistered and registered, RCM is there, and 2% TDS applicability on the supply of metal scrap by registered person to registered person, B2B. Of course, there has to be, there will be compliance burden on the trade, but to combat this, fake invoicing, there was no other way than TDS provisions to, stop this fake invoicing. And I think it's a very welcome step. Of course, along with compliance burden little bit on the B2B registered persons, there would be much relief in terms of reduction of the harassment for the fake invoicing. And we believe that it should also be extended to non-metal scraps also. Then lot of clarifications have come on the treatment of the preferential location charges in the construction services. So sometimes what was happening is, when a customer is going to purchase a flat, then his builder is charging some additional amount in terms of, sir, this is like a preferential plot, this is a park facing plot, this is a Vastu compliant plot. So some additional charges are being charged by the dealers. So what was happening is this was being treated as a separate supply, not as a part of the construction supply being provided by the builder. Of course, before the CCOC, as we all know, after once CCOC has been obtained, if construction or sale is being taken place after that, then it is not come under the preview of GST. It is a Schedule 3 item. But if this is before CCOC and it is being provided together with the construction services, then now it has been clarified that these PLC services would be part of the main construction service as a composite supply, and 1/3 dimming fiction or the 1/3 land deduction would be applicable on these charges, PLC charges in construction services. This should not be treated as a independent supply. So some advanced rulings had come out that this is an independent supply. 1/3 deduction would not be applicable on these kind of services, but now it is being clarified that it is a part of composite supply, and 1/3 deduction would be applicable as a part of composite supply in this PLC services. Now GTS services we have already discussed. If GTS providing any other service, loading, unloading, packing service as a part of the transportation service in a same invoice, then it would be a composite supply. If it is being given in an independent supply or additional supply, then it will be treated as a separate supply, and respective rates would be applicable. GST rates on car seats, I have already said that rates have been increased from 18 to 28% in parity with the motor vehicle parts, and it is to bring in line with the parity, basically nothing more than that. Then roof mounted package unit, there was a lot of litigation on this issue also, and now the council has recommended to clarify that this roof mounted package unit will be classified under HSN 8415, attracting a GST rate of 28%, which is likely to settle all the ongoing disputes. New procedures have come. 16.5, 16.6 is soon going to be notified, which will up to 30th November 2021, if you have claimed in any GST or 3B return due to any pertaining to any 3B return you have claimed ITC up to 30th November 2021, then you are well eligible for the ITC. This is going to close all the litigation, the cases which are pending in the High Court. So even I was just reading the one of the High Court judgment. They have just closed these cases by passing an order for all the writ petitions taken together, and they have referred to the 16.5 cases. As and when it will be notified, all these cases, appeals probably are going to be closed. And in similar cases, 16C, where there is a revocation cases where the cancellation was happening, and revocation till the time of revocation, it may take 1 year, 2 year to get the cancellation being in the original state being active. Then now within next 30 days, you can claim the ITC under section 16C once your GST registration is revoked, and 30 days will be applicable, and it will be compliance to the section 16.4. 128A we have discussed. It's a very welcome provision, and interest penalty waiver is being given. It is kind of trade will just pay the demand of the tax, and interest penalty waiver would be there. It is going to settle and close lot of litigations once it is notified. It is going to be notified with effect from 1st November 2024, and you have to pay the tax on or before 31st March 2025. So practically you have 4 months to pay the tax and take the benefit of the waiver of interest and penalty. Procedure and certain forms are going to be notified very soon through the notification in the 128A, and you will see that procedural requirement will also be notified along with the section notification. Rule would be there, and the benefit would be extended to the trade. E-invoicing facility, I have already told and discussed this. I'm just leaving it. New functionalities on the portal by the name of invoice management system, where you can accept, reject, keep it pending. Those options have been given, and you can share your opening balances in the ledgers by 31st October 2024. Then RCM liability ITC statement that was introduced by the GST and advisory dated 23/8/2024 to ensure that correct reporting of the RCM transactions. The statement will capture the RCM liability reported in the table 3 and corresponding ITC in the table 4 of the 3B for the return period. Same will be applicable from the tax period of August 2024. So IMS is a welcome provision introduced by the GST and advisory dated 3 September 24, and it will enable the taxpayers to accept, reject, or keep the invoices for the purpose of availing ITC. So all the facilities that are being enhanced for the services of the taxpayers, be it B2C invoicing, invoice management system, a new RCM liability ITC statement, is just to assist the taxpayers to give more functionalities and more benefit on the GST. Now we will discuss the GST rate reductions and GST this particular certain rates that we have already discussed per se. I do not need to repeat it again. 5% rate has been extended to the helicopter services on seat share basis. Previously it was on the transportation of passengers by helicopter, but on seat sharing basis there was a ambiguity. Now it is being extended to seat share basis also. But in case charter plane is there, then GST rate will be 18% only, not 5%. Reduction in rate I have already discussed. Cancer drug rate reduction I have already discussed, from 12% to 5%. Regularizing the GST liability for the film distributor prior to 1st October 2021 on as-is where basis is a welcome step, where the DGTS was opening the cases prior to 1st October 2021 that the rate will be 18% as a recommendation of the 45th GST Council meeting. But now in the 54th GST Council meeting, the matters have been regularized, and the relief has been given in this regularization on past cases. GM I have already discussed. Even I would like to state that rate rationalization and real estate, GM is meeting today and even met yesterday in Goa to discuss the rate rationalization measures and real estate measures. So we can expect in the next council meeting, which is tentatively will happen in the November. I think we can expect a lot more changes and incentives or the real estate sector changes and the rate rationalization measures can be further taken up by the GST Council in the next council meeting. Fate of compensations as will also be discussed by a separate GUM that has been recommended to be set up on its levy on its fate post 2026. So I think we have covered pretty much all the details. Introduction of the 11A I've already talked of. That would be applicable in rarest of the rare cases. I've already discussed this circulars also on the intermediary services, then advertising agencies. The circulars have come where the place of supply has been defined. Eligibility of the demo vehicles for the dealers of vehicle manufacturer, ITC has been allowed. The issue was this, that section 17(5) of course restricts the motor vehicles for transportation passengers up to 13 persons. Whether ITC on the demo car is considered as the ineligible criteria in the section. So it was clarified that because there is an exception to this sections subclause A of the subsection of the section 17(5)(a) of the CGST Act. So ITC on demo vehicles shall be allowed because it is being considered as the for making further supply of such motor vehicles. So this is to be highlighted, that further supply of such motor vehicles, and this carve out is an exception to the 17(5)(a), and thus ITC on the demo vehicles shall be allowed, and this has been clarified recently through circular 231/25/2024. However, if it is demo vehicles are used for purposes other than making further supply, means on its own account, then ITC will not be available. So this has been clarified by the circular. So giving in positive of the time constraint given to me, I am just touching upon the main issue and not able to go much detail and deeper into the issues and why the issue was there and why the clarification has come. But still I am just touching upon so that trade is being apprised of the changes that have come out of this 54th GST Council meeting. Only 2 circulars I will discuss, and in the next 5 minutes I am going to just stop my presentation, and then we will open the floor for the question answer discussion. I will take another 3 minutes more, and then I am going to close my PPT. Data hosting services provided by the service providers located in India to the cloud computing services providers outside India. Now you see, it was the question arises whether it is an intermediary. So you see, as per intermediary, there is no facilitation being provided by the data hosting services between cloud computing service providers and the end users. Even sometimes circular is stating that cloud computing service provider do not know anything about the end users. It is only being handled by the data hosting service providers located in India. So in these cases, the data hosting service providing data hosting services provider in India is providing the facilities on its own. It is not just facilitating between the two, but it is providing on its own. When it is providing on its own, it is not an intermediary service, and perhaps the place of supply shall be determined as per the normal rule 13 subsection 2 of the GST Act, that is the location of the service recipient, which is located outside India, and thus the export incentive schemes will also be available, and perhaps subject to availment and the compliance of the other rules per se. Rule 9610 89 4A 4B was creating hindrance in a view that 89 4B, you all know, there was no formula prescribed for that. It was starting that input services other than that 78, 79 notifications benefits. Then what was the issue was that the officers were litigating this particular fact that there is no formula prescribed in 89(4)(b), and hence we will not give benefit to the other input and input services. There has to be one-to-one correlation. While 89(4) formula was just giving pro rata basis adjusted turnover, export turnover divided by adjusted turnover. So that's why it was creating so much problem for the exporters that council had to omit the 4A, 4B together with the rule 9610. And now for the ease of exporters, there will be no hindrance in availing the export benefits under the export incentive schemes that has been recommended by the 54th GST Council meeting by omitting these three things, rule 9610, 89 and 89(4)(b) to simplify and expedite the refund claims. So I think it is again a very, very welcome step. And in conclusion, what I can say is GST Council meetings have addressed lot of issues, a lot of deliberation is happening. We should of course read the agenda for sure. That is available on the GST Council website, and then you will be able to get an insight that as to why the particular amendment was brought. So when you read as a tax professional in this way, that why the amendment was brought, what was the reason behind the introduction of the amendment, then you are going to get more deeper insight on how council work, how deliberation happens, what was the reason to bring into that, what was the underlying principle for the council to take such a big decision. Then we will be much in a position to praise and appreciate the facilities, the steps that are being taken by the DGTS, that are being taken by the CBIC, that are being taken by the GST Council, Minister of Finance, Honorable Revenue Secretary Sir, Honorable Finance Ministry Sir, Law Committee, Fitment Committee, and you will really see that lot of deliberations are happening. And after this lot of hard work of all the learned and esteemed officers, these recommendations are coming for the benefit of all the stakeholders. So with this, I will just stop here, and I will just open the floor for all the discussions of the question answer session. My number, mail ID is there on the PPT. So post question answer discussion, if any queries there, we can take it on the email ID. And I really thank all the participants for the patient hearing, and I thank DGTS for taking such a great initiative to organize such a wonderful webinar and giving me this opportunity to be here to share my limited experience with all the participants and all the learned officers. So thank you so much. Now we can take up the question answer session.
Thank you, Mr. Shiva Goyal, for such a comprehensive presentation. Your expertise and clear explanations have provided us with a deep understanding. We truly appreciate the valuable knowledge you have shared with us today. Thank you again. Now I would like to invite participants for questions, if any. Kindly ensure that questions asked should be relevant to our today's topic. Further questions can be asked using the chat box. Now house is open for the question answer session.
Yes, PPT. There's a question, provide us the PPT. So I think PPT will be available. Moderator sir will tell whether PPT would be available or not.
Yeah, it will be.
Okay. Any other questions that any participant may have? some views on the exemption of the R&D. So you see that all the research, and even I would appreciate Bisla sir is also is a very learned, indirect tax advisor to the CII. So I would also request sir to engage with me to provide the explanations and views if I've missed something. So exemption on R&D was much required. Actually, the DGTI officers or some of the officers were of view that the research and developmental activities are well covered in the supply, and perhaps it is taxable, and they were also giving a lot of notices to the R&D activity. Wherever the research and developmental activity, wherever it is happening, government always tries to promote these activities. The taxability on these particular developmental activities disincentivize the organizations to take up further incur the expenses on the research and developmental activities. So if there is a GST of 18% on the R&D activity, probably it is going to increase the cost on the R&D activity, which of course is not the purpose of the government at all. Even the Ministry of Department of Research and our Honorable PMO, Honorable PM Modi sir has given much weightage to the research and developmental activity, and therefore the exemption has been proposed. Bisla sir, you would like to add something to it?
Thank you. You have rightly mentioned about the benefits of exemption and benefits of not exemption on R&D. We have seen that wherever exemptions have been granted, the price of that supply has increased drastically, because whenever there is some tax involved on the input services or inputs used in any supply, then when ITC is admissible, that cost is reduced to that extent. And if the sector is asking for exemption, they lose that input tax credit, and that is added to the cost. Thereby, the price is increased. We have seen the healthcare services which is exempted, and now they feel that either healthcare services should be brought under tax net, or then it should be treated as a zero-rated supply, and they are paying taxes on their input supply, capital goods, equipments, medicines, which become part of their cost.
So the next question is this: in which period we can take the RCM opening balance? Is the new Suresh Shetty ji कह रहे हैं, till which period we can take RCM opening balance is the new RCM ledger. So it is available from the tax period starting from August 24, and you can take it for quarterly filers, you can take it from July to September 24. So for monthly filers, you can note the period as August 24, and for quarterly filers, you can probably take the period as July to September 24. The next question has come from Manish Kumar Agarwal ji. Please mark it to everyone, not privately to me. Whenever there is any participant is asking any question, please, I would request mark it to everyone. Whether circular has come with this respect to exemption on ancillary services. No, circular has not come yet on this electricity services provided by the electricity companies. Only 4 circulars have come. One is hosting service, one is intermediary service, another one is demo vehicles, and Rule 9610. Other than that, no circular has been released till today. This is still to come. Exemption on ancillary services provided by the electricity companies. It will soon come. Because it's an exemption, mind it is not going to be effected through circular. Rather, it is going to come through exemption notification. Why not, Bisla sir? I think the exemption notification will come into force, na? That circular will not come.
Yeah, notification will come into.
Will come. So it takes time. So, there is a procedure to issue a notification. So it takes time. Probably it should come within a month or two for sure.
Sir, we would
Uh,
request officers to give comments on this aspect also.
Yes, probably. AWPM has given the suggestions for the GST reduction for the welding consumables against recommendations for the year 25-26. Any update on? Please, Vilasji, you need to just give one more suggestion or representation to the council for the same, and you should email it for knowing the update on the your representation that was earlier given. But I would suggest you to give one more email and just attach the representation once again, so that it may be missed out. It can be taken up by the council office again. So the update would be given by the secretariat only.
You see, this forum is actually not for giving suggestions on this. We are just today organizing a training on webinar on what was the recommendations of the 53rd and 54th GST Council, what has been decided. As regards notifications and all, yes, as and when there will be issue, we'll let you know. And further, anything related to the topic today can be asked. Further suggestions and all can always email to our office, which will forward it to the concerned office of the policy wing. This is not the forum, to ask about these suggestions, what has been done on that or not done on that.
Another question is regarding the man-made fibers raw material PTA MBG to be 12% from existing 18% in line with the downstream, this to smoothen GST accumulation. Again, they are asking for the.
I think now technical questions have started coming, different issues related to the other, act provisions and all.
Update. They are asking for the update, sir. What is the update on the submission?
Yeah. See, today is a limited, that's a limited topic we have considered, and we can, answer that on that. Anything related to this, if they want to ask, that if they have not understood anything in the, recommendations and what has been decided. Section 120 automatic available from this or come any notification circular? Yes, the details and all will further come.
What is the change, the GST refund process after the Ravinder Goyalji, GST refund process is the same. There is no change in that. In upward revision cases, there is a change. You can apply it in the other cases. 4A, 4B cases all will be dealt with Rule 89.4. So mechanism to GST refund process will remain same as it is existing. Only the where the problem was coming has been sorted out by the GST Council. Otherwise, there is refund process. Whatever
questions or anything which has been done or not been done, or any change expected, not happened. All that I'm saying that if you want to recommend something or you want to specifically know, you can always email us. The address will be there. We'll post the address here. So apart from that, I think now the related to topics, I'm not getting any questions. So we can now, Ravinder, we can think about closing this webinar now.
Yeah, sir. Mr. Goyal, I think we are done with the questions. I think the questions which are related to topic 1 or 2 has been answered, and I think now we are digressing from the today's given topic, and we have some time constraints as well. We have some another scheduled meeting coming up at another 10-15 minutes, so we won't be able to spare much time. So now, thank you so much for your participation and your kind patience. I hope today's session has been informative and all of us leave with a clearer understanding of the recommendation of 53 and 54th GST Council meeting. To conclude, a sincere thanks to Shri J.S. Negi sir. Sir, we greatly appreciate your time and it has been an honor to have you as a part of our webinar. Also, we are thankful to Shri Amish Kumar Gupta sir for his time and inputs. As we conclude this enriching session, I would like to express my heartfelt thanks to all who made this webinar possible. Also, I would like to extend my sincere thanks to Shri Bisla for your invaluable contribution to today's webinar, and a special thanks to Mr. Goyal for his expertise and depth of knowledge you shared on the topic that has truly enriched this session.
Thank you.
We appreciate your dedication and clear, insightful way, and the way you communicated complex ideas. Now, in the end, I would like to thank all the participants for joining us today. We truly appreciate your taking the time to be a part of this session, and we hope you found it valuable. Your participation and engagement is greatly appreciated. We'll look forward to having you with us at future webinars. Have a great evening. Thank you so much. Thank you all.
Thank you, sir.
Thank you.